Awesome. Hi, everyone. Thanks, Maddie. My name is Kendal. I've been at Elire for 3 years now. I work in the Kyriba and PeopleSoft practice, implementing payments with an expertise in cash management and forecasting.
Hey everyone, my name is JayJay Gutierrez. I'm an associate partner here at Elire. I've been in the EPM space for the past 20 years. Over the course of my career, I've had the privilege of working with a lot of diverse clients, guiding them through the complexities of the EPM roadmap. And my expertise really lies in leveraging leading practices in the EPM space, driving enhanced decision making and achieving strategic objectives. One of them being ESG. And so today I'm excited to share some insights and solutions that can help you report with your report and create data for your ESG solutions. So thank you.
Awesome. So just a little agenda for today. We're going to go over the introductions of Elire. Then we're going to get into what is ESG, importance of ESG in Treasury corporate strategy, ESG's impact on cash management, deal management, and working capital, Treasury adoption of ESG, and then some case studies. And at the end, we'll have some time for questions. First things first, Elire introduction and industry expertise. Elire was founded in 2005 based on founding partners' expertise in the Treasury space. Since then, we've supported 250 Treasury workstation implementations and advisory projects. Our goal is to be a trusted advisor to our clients, supporting the people, processes, and systems that make their business successful. These are a little bit about our services. While we got our start in Treasury, Elire has since expanded to 6 key centers of excellence: Oracle Cloud Services, PeopleSoft Services, Treasury, Advisory Services, Managed Services, and newly EPM and Analytics with our acquisition of Stratalized Solutions. Just a little bit more about our Treasury practices, as today is all about Treasury. Here's a sample of our valued clients. We're very proud of the work that we have done to earn these clients' trust and continued business. Now let's get into it. What is ESG? In the corporate treasury world, and it means environmental, social, and governance criteria, which represents a framework assessing and integrating non-financial factors into financial decision-making and risk management. ESG considerations involve evaluating how a company's operations impact the environment, how it manages relationships with employees, customers, and communities, and how it upholds governance practices with such as an ethical conduct and transparency. For corporate treasurers, incorporating ESG factors means aligning investment strategies, risk assessments, and financial reporting with broader sustainability goals, ultimately enhancing long-term value and resilience while meeting stakeholder expectations for responsible business practices. ESG is important to Treasury because it is beneficial both to the business's reputation to its bottom line. Expectations from investors, rating agencies, and shareholders fundamentally tie ESG to the long-term financial success of the business.
And Kendall, just let me add something on the ESG side. On the EPM side, we do a lot of financial reporting and publishing of the Ks and the Qs. And so ESG is a huge part of that. And we're constantly being asked to add ESG, or how can we incorporate ESG into our reporting packages, because investors are asking about those questions. And so identifying how are you going to capture that data, how are you going to report that data, and how are you going to incorporate that data into your monthly, quarterly, annual reporting package is a big thing in the industry.
Yeah, awesome. Thanks, JayJay. A little bit more on what is ESG. Factoring ESG into capital deployment, funding, allocations, account management, and more can help improve performance. With acquisition of sufficient data, ESG metrics can be integrated into the investment process when deciding what entities or bonds to purchase. For the environmental piece, this aspect focuses on how companies' financial decisions impact and are impacted by environmental factors. In corporate treasury, this includes evaluating investments and financing options with a view to their environmental footprint. For example, treasurers may assess the environmental risks associated with investments in industries with high carbon emissions or consider green bonds that fund sustainable projects. Environmental considerations also involve managing risks related to climate change and resource scarcity, which can influence long-term financial stability and asset values. In the social sector, the social component addresses how a company's activities affect and engage with its employees, customers, and communities. In Treasury operations, this can involve evaluating the social implications of investment choices and partnerships. For instance, a company might prioritize financing for projects that enhance community welfare or promote fair labor practices. Social considerations also include assessing risks related to human rights violations or labor disputes, which can impact a company's reputation and financial performance. Under the governance sector, governance pertains to the systems and practices by which a company is directed and controlled. For corporate treasury, this means ensuring the financial management practices align with the strong governance standards such as transparency, accountability, and ethical conduct. This includes overseeing the adherence to regulatory requirements, evaluating the integrity of financial reporting, and managing relationships with stakeholders. Effective governance helps prevent financial mismanagement and corruption, thus safeguarding the company's financial health and reputation. ESG and corporate treasury involves integrating environmental impact assessments, social responsibility considerations, and robust governance practices into financial decision-making to promote sustainable and ethical business operations. Now, let's put this into play. The importance of ESG in treasury corporate strategy. Here are the 6 categories we separate ESG by in treasury corporate strategy. First is issue prioritization. Issue prioritization in ESG corporate treasury involves strategically assessing and addressing various ESG related factors to align financial management and broader sustainability and ethical goals. A few examples are, number 1, assessing and prioritizing risks associated with climate change, such as potential regulatory changes or physical impacts on assets. Number 2, focusing on investments that enhance energy efficiency and reduce resource consumption. And number 3, evaluating and supporting initiatives that positively affect the communities in which the company operates, thereby enhancing corporate reputation and reducing social risks. Number 2 is ESG standards. In corporate treasury, ESG standards guide the integration of environmental, social, and governance factors into financial practices and decision-making. These standards ensure that treasury operations align with sustainability goals and ethical considerations. This includes, but is not limited to, climate risk disclosure, green bond principles, social accountability standards, UN Sustainable Development Goals, also known as SDG, corporate governance codes, international financial reporting standards, or IFRS. Next is process alignment. Aligning ESG factors with corporate strategy involves integrating these considerations into every aspect of business operations and decision-making to ensure sustainability and ethical practice. An overview of a structured approach to achieving alignment is as follows. Number 1, establish ESG objectives within your corporation. Number 2, integrate ESG into corporate strategy. Number 3, develop ESG policies and procedures throughout your entire practice. Number 4, allocate the resources necessary. Number 5, monitor and measure the results. And number 6, continuous improvement. Next, we'll go into the risk landscape. This includes managing various risks that can impact financial stability and long-term value. Some risks to consider are climate change risk, resource scarcity, and so on. We also have build influence and access and mitigate. Climate change is important as companies will continue to face the risks related to it and regulations aimed at reducing carbon emissions. All right, under risk management, companies that overperform poorly on ESG criteria may face risks such as lawsuits, fines, or reputations damage, which can negatively impact their financial performance. Under competitive advantage, companies that prioritize ESG factors can gain a competitive advantage by attracting customers, investors, and employees who value ethical, sustainable practices. Next is long-term sustainability. Companies that integrate ESG factors into their business strategy are more likely to be financially sustainable over the long term, as they are better positioned to adapt to changing market and social trends. Moving on to regulations and compliance, ESG considerations are increasingly being regulated by governments and industry associations, so companies that are proactive in addressing these issues are better positioned to comply with evolving regulations. And next poll question, does your organization have an ESG policy in place, or do you plan on implementing one in the near future?
You can see our first poll question on your screen. Answers are yes, yes, but needs improvement. No, not yet, but we're working on it. We have no plans to add an ESG policy, or this isn't applicable to our organization. Give people another 15 seconds or so to get their answers into this poll question. All right, it looks like we have about 82% of people have responded so far. Most organizations have yes as the answer.
Nice.
42% have an ESG
Love to
policy
hear
in
that.
place already.
What's the second in line?
Applicable right now, and then
Okay.
10% have yes, but needs improvement.
Awesome. Awesome.
I was assuming there's going to be no, but
I was
we're working
assuming
on
that
it.
too. This is exciting.
Great.
It's a default answer to my boss.
All right. Are we ready to move on, Maddie?
Yep.
Okay, awesome. If my slideshow wants to move. Oh, there we go. Okay, next we're going to move into ESG impact on cash management, deal management, and working capital. The next stage of this evolution of Treasurer's responsibilities is for them to become an ambassador for ESG issues. Treasury is uniquely positioned to play this role because of its connections across the various parts of the business that can be critical in delivering ESG-related targets, including procurement, sales, finance, and other functions. Indeed, in some cases, Treasury may be the only function capable of helping to enable corporates to achieve their ESG goals. The lack of clear ESG standards and the newness of the topic for some has led to some cynicism in the market about greenwashing associated with corporates' ESG policies. Third-party auditing and certification, and therefore critical. Certainly, many of the standards and frameworks around sustainability continue to evolve. The European Union is working on multiple initiatives to put ESG considerations at the heart of the region's financial system to help transform Europe's economy into a greener, more resilient, and circular system, for instance. And hopefully we follow. As sustainable investing begins to play a more central role in institutional portfolios, corporate investors are benefiting from a double return. Comparable market rate performance held to the same standard of capital preservation and risk mitigation, all while pursuing their environmental and social impact goals. Banking and lending partners, how you report on cash investments, EPM, ESG reporting helps report how much exposure you have green, carbon neutral versus traditional investments. More impacts can be categorized as access to capital, green financing, enhanced disclosure, stakeholder communication, sustainable operations, resource allocation, and brand value. Last but not least, competitive advantage. Companies that are early adopters of ESG principles in their treasury operations can gain a competitive edge over peers who are slower to integrate these practices, striving for both social benefit and return in tandem. Moving into deal management, specifically with credit risks, ESG has a notable impact on various aspects of how deals are structured, evaluated, and executed, including the following. Number one, financial performance. Cost of capital. Companies with strong ESG credentials may benefit from lower cost of capital by attracting favorable terms from investors who prioritize ESG. Value creation. ESG-focused deals can create long-term value by contributing to sustainable business practices, enhancing operational efficiencies, and opening up new market opportunities. Number two, regulatory and compliance. Adherence to ESG regulations, where evolving ESG regulations and standards that deals must comply with. Transparency and reporting. Detailed reporting on ESG aspects of deals to satisfy stakeholders' expectations for transparency. And number three, risk management. ESG risk assessment is the evaluation of environmental impact, social responsibility, and governance practice of counterparties to identify any ESG related risks related to the deals at hand. Long-term risk mitigation, ensuring deals contribute to sustainable growth and mitigate potential social and environmental liabilities. Number 4, deal structuring. Sustainable finance instruments, green bonds, sustainability-linked loans, and social bonds. Inventive structures, deals may include incentives or penalties based on the achievement of predefined ESG targets. The sustainability outcome is decarbonizations, eco-friendly packages, diversity vendors, and VC funding. Moving on to the working capital. ESG's impact on corporations' working capital impacts the management of a company's short-term assets and liabilities, improving both sustainability and financial performance. Some of the key impacts are the following: sustainable supplier practices, supplier selection. Companies are increasingly prioritizing suppliers with strong ESG practices. This ensures that the entire supply chain aligns with the company's sustainability goals, reducing environmental impact and promoting fair labor practices. Supplier financing programs. Treasury departments may implement supplier financing programs such as supply chain finance or reverse factoring that incentivize ESG compliant better financing terms. Number 2, efficient cash management. Green cash investments. Companies are directing their short-term investments towards green and sustainable financial instruments, such as green money market funds or ESG-focused short-term bonds. This aligns idle cash with the company's ESG goals. ESG metrics in cash forecasting. Incorporating ESG metrics into cash forecasting helps Treasury departments predict and manage cash flows more effectively, considering sustainability impacts. And number 3, receivables management. ESG focused credit policies. Treasury departments are adopting credit policies that consider the ESG performance of customers. Customers with strong ESG credentials may receive more favorable credit terms, enhancing receivables management. Incentivizing ESG behavior. Companies can offer discounts to other incentives to customers who demonstrate strong ESG practices, encouraging prompt payments and fostering long-term relationships. Number 4, payables management. Sustainable payable practices. Companies can adopt payment practices that promote sustainability, such as electronic payments to reduce paper use and optimizing payment terms to support suppliers' financial health and ESG initiatives. Early payment programs. Implementing early payment programs for ESG compliant suppliers can strengthen relationships and ensure a stable supply chain while supporting suppliers' cash flow. Number 5, inventory management. Sustainable inventory practices. Treasury can work with supply chain management to ensure that inventory practices can align with ESG principles, such as reducing waste, improving resource efficiency, and using sustainable materials. Optimizing inventory levels. By aligning inventory management with ESG goals, companies can reduce excess inventory and minimize waste, leading to more sustainable operations and better working capital management. Now I'm going to turn it over to JayJay to discuss the Treasury adoption of ESG.
Thank you, Kendal. So according to a recent survey by the Association for Financial Professionals, 64% of corporate treasurers in North America consider ESG factors when making investment decisions. And so I guess our team here is ahead of the curve. We're 80% of the way there. So that's great. So I think it's great that everyone here is thinking about it. Obviously, you guys attended. And so really, I'm here to talk through the technology to support a lot of these ESG initiatives. Right. And so the ability to create all of the data and to capture all of the data and what data to track. Right. And so supply chain transparency is a big one. So being able to track the different the ESG performance across your different suppliers and being able to ask those questions and track that or have that supply chain transparency. Employee engagement and diversity. Have tools to be able to track the diversity in your workplace, and being able to collect all of that data is a big thing. And same thing with carbon footprint tracking. being able to manage and track all the different carbon emissions from your different operating units. Again, all of these pieces of technology are used to collect and create and collect the data. Because without the data itself, then you're going to struggle with reporting. And so it's key that with new initiatives like ESG, that where people are thinking about the different technologies to create a lot of the data, because we might not, because it from a reporting standpoint, if you start from the end going to the beginning, you have the template, what you need to report on. Now it's how do we collect that data? And so there's different tools from each side that allow you to meet those reporting needs. Investment and risk management. So tools that help investors integrate ESG factors in their investment decisions and risk assessments. Being able to assign risk based on a company's ESG and your partner's ESG profiles. Having tools to track all of that, again, is going to be the next step in your ESG progression. And the main piece I will be talking about here is actually once you've got all of that data collected, how do you report on that? Or how do we add this to our monthly and quarterly reporting packages? So here at Elire, I am a part of our Enterprise Performance Management Center of Excellence. We are widely considered the Oracle EPM experts. We've implemented more than 300 Oracle EPM projects. Our group has really been together for the past 15 years. So our core leadership and the majority of our consultants, we've all been together. We've all worked as a team. And so we've all grown with the application. We've grown through and seen the different enhancements in the EPM space. And so ESG is really one of them. But I just wanted to highlight the other Oracle EPM offerings, because actually Oracle EPM is a suite of tools that not only allows you to do reporting, forecasting, budgeting, but it also allows you to do a lot of the other financial close processes, account reconciliation processes, profitability. We just came out of a predictive cash flow module that recently came out. And then also another important piece around the EPM technology and the actionable ERP and EPM technology in general is the data management piece of this. And so like, as we add new metrics, as we add new ways of looking at things, especially around ESG, how do we incorporate those data points into our existing applications? And so I think data management is the key to having a successful change management process. So for example, if you're going to add maybe ESG metrics to your current reporting structure, how do you distribute that throughout all of your reports? And so with a tool like data management, allows you to push all of that information across the reports, add additional general ledger accounts to support ESG reporting, add additional maybe business units to support ESG reporting, departments. So pushing all of your data requirements across the applications, I think, is a big piece of the EPM suite of tools. And so from an ESG reporting perspective, the ESG module has recently come out. I think it was about almost, I want to say, just maybe under a year ago when the module came out. And so with ESG reporting, it gives you a best practice module that walks you through the different types of reporting and actually asks you questions in terms of just, are you considering these things? It gives you certain metrics that most organizations are looking at from an ESG perspective. So it really increases that time to implement and increases that time for you to provide value in an EPM solution. And so since we're incorporating ESG into the PBCS framework, I'm sure maybe some of you are already using Oracle and budgeting cloud service. If not, maybe you're using a similar tool to facilitate your forecasting and budgeting. But because we're using a familiar tool to incorporate the forecasting and budgeting, that makes the ESG reporting pieces of it a lot easier to add. Because if you already have EPM, you can simply activate the ESG module or ESG framework. It'll walk you through configuring all of those things. And again, it just enhances the value of having an EPM license. And so from an end-to-end process, you're able to integrate with any of those tools that I just mentioned earlier from an ESG perspective. And so even if you don't have any of those tools, you can integrate them just from a manual collection process through Excel. There's a lot of different ways to integrate with Oracle EPM. And so you're again leveraging tried practices in the forecasting and budgeting space to administer for your new ESG reporting and planning process. And so it's not a new tool that you have to learn, or it's not a ESG, let's say, developing tool. This is a tried and tested tool for from a financial budgeting reporting perspective. So can you let's oh, no problem. Yeah, right here. Yeah. And so we can now that we can collect our data, it also creates a process to create the data, right? And so it walks you through like what the different environmental, different social, the different governance questions or dimensions or aspects that we need to add. It also creates those calculations for you within the application. So it does a good job of, maybe leveraging existing calculations that it brings with the framework, but it also allows you to add your own specific calculations. And so allows you to customize this. This is a very, very treasury and finance and end user focused tool. And so you're not having to, let's say, go out and I'd love you guys to hire us all the time to do all of your consulting to configure this. But my goal is to actually roll something out, roll an ESG solution out that you can maintain yourself, right? And you can continually add so that your value and your investments will continue to grow. So I think the calculation and the engine is huge. And then also data integrity, right? So because you're using an existing platform that is used to integrating all of these different types of data, you're able to integrate and validate a lot of the data that's coming through. And you can incorporate a lot of your ESG initiatives to your existing financial data. And so it just kind of creates that single version of the truth across your entire reporting process. And then you could also, again, release this data or release this module with your existing data, financial packages. So whether it be you're currently using Oracle, or if you're not, they have different tools to release the data. A lot of it actually is leveraging Excel as an output. As much as we'd like to get away from using Excel, Excel is still a primary tool that a lot of my clients still use. All right, and so the other thing with ESG and PBCS is that you get machine learning with it. And so there's built-in artificial intelligence. And so in building a lot of these models for forecasting and budgeting, it's easy for us to, let's say, maybe build the model once and maybe have it work great for a couple iterations. But as an organization changes, as the process changes, as government requirements change, or as reporting requirements change, being able to add machine learning and artificial intelligence to those processes is huge. So Insights is one of those tools. What the system will do is actually go through the data that you loaded, go through the forecast that you created, and then maybe, let's say, compare any of the forecast to actual variances that are in the system and say, okay, or even compare actual to historical actual data variances that are in the system. So within Insights, it quickly allows you to identify anomalies in the data, which traditionally you'd have to, let's say, have a group of analysts look through this data. So being able to extract a lot of these data anomalies is allowing you to make decisions a lot quicker. And so with the addition of machine learning and predictive planning and insights, it allows your model and to actually grow with your business. So if you're continually seeing insights here that your forecasting process is not as close as you'd like it to be, you can make changes to the process, make enhancements to the process that'll be shown here quickly within this insights dashboard. And the pre-built reporting templates, like Kendal mentioned, IFRS, the CSRD template. So a lot of the known templates and a lot of the known reporting requirements, the ESG module and framework has a pre-built reporting or pre-built reporting template for it. So even if you're just starting out your ESG reporting journey, you can use the templates and maybe, let's say, work backwards from those reporting templates. Start to ask the data collection questions that you need to satisfy a lot of the reporting requirements that are going to be coming out. So again, building or leveraging some of the pre-built processes within Oracle EPM's ESG to enhance or create your own ESG process. And I always, in any PBCS presentation and in any EPM presentation, the ability to interact with Excel is always a huge consideration working with Treasury and finance folks. A lot of my clients still really just mainly live in Excel, have 10, 20 spreadsheets up. And so they're used to providing their analytics with Excel. As much as companies are trying to get away from it, where Excel is still a primary tool. And so with the Excel Smart View add-in, you're able to interact with your ESG module within Excel. And so you're able to incorporate a lot of your existing reporting, in Excel with your new ESG model. So again, gives you a familiar interface to interact with, gives you all the standard functionality that, let's say, maybe the web version of PBCS and ESG gives you, but also keeps it in Excel, allows you to integrate quickly. You can use this both to extract data out of your ESG module or import data. So if you don't, let's say, have all of those systems that I mentioned earlier to create, some of the supplier mapping or some of the strategic workforce, like identifying diversity in the workforce. If you don't have a lot of that stuff, that's really not a big deal because you can use Excel to integrate some of those offline data points and operational points within your system. So again, leveraging familiar tools against a standard model so that you can kind of get a quicker time to go live and quicker time to realize your investment. Again, just overview. You're getting a lot with the ESG planning solution. You're getting a lot a tried and true forecasting and budgeting system. You're getting the predictive analytics. You're getting the insights. You're getting a finance and treasury focused tool, so you can enhance and update the application as you wish. You get pre-built reporting templates. You get Smart View. Again, so with the EPM and ESG licensing, Oracle's is only going to continue to add. So like I said, ESG is a new framework, but we also had predictive cash forecasting as it is a new framework. So all of these things come with a single licensing. I mean, you can even use, some I mentioned in our keynote, account reconciliation. So being able to validate a lot of the data that you're coming through, making sure that's consistent. So again, you're able to realize a rapid implementation, being able to use a familiar tool, and as your business changes and as new things come through, Oracle's continually adding to the PBCS suite and also the ESG reporting suite.
Awesome. Thanks, JayJay. Now we can get into the fun part, ESG case studies that we have worked with. First and foremost is a Kyriba case study with the TMS. Research from BSG in 2021 found that 80% of companies plan to increase their investments in sustainability. RSM's 2022 ESG report found that 70% of mid-sized companies have implemented formal ESG plans or strategies, up from 66% in 2021. 88% of those middle market companies provide external reporting on their ESG performance, and 69 now have a dedicated senior executive charged with establishing and executing an ESG vision. This has an immediate impact on the working capital and technology in place to track and report the changes. And here was their solution. Kyriba's offering, which is this supply chain financial platform with embedded ESG into working capital programs. The supply chain finance benefits include dynamic discounting, supply chain finance, white label for banks. Our next case study is an Oracle Cloud EPM case study, as JayJay was explaining earlier. Around the world, legislators have adopted proposals to increase sustainability reporting requirements. With evolving ESG requirements, most organizations are slowed down with disconnected point solutions where reporting and planning is not readily available, often requiring expensive and extensive customizations to perform the same work of programs already efficient in the process. Data collection. All departments with effect to ESG, supply chain, HR, ERP, operations, and aggregate all data for consistent picture of organization. The pending question, how do you ensure the integrity of the data being used, and how can you be confident that you are treating the metrics and KPIs consistently? The imperative part of your ESG infrastructure is robust confidence in understanding current sustainability practices and adjust as necessary. Oracle Cloud EPM collects, standardizes, and aggregates all ESG data within the following optimizations: dashboard, full Microsoft Office integration, ad hoc insight across all ESG KPIs, satisfied GRI, CSRD, SASB, and other ESG reporting frameworks. And it also reports packaging for internal and external consumption.
And Kendall, on the EPM case study here, I've had clients before the actual ESG module come out and manually or try to come up with homegrown solutions for the for ESG. And the question always comes back to, all right, what are the requirements, right? And so having a framework to kind of establish those requirements for you simplifies a lot of the simplifies a lot of the process, because it gives you a starting point. Because in that project that I recently implemented, we had to get ESG experts that came through, provided some models and some data reporting requirements, and then we had us as a firm that implemented EPM had to implement those requirements. Now that we have a framework for it, that just kind of simplifies the time to go live and the time to actually report on your ESG data through EPM.
Awesome. Thanks, JayJay. Continuing on with this second case study of Oracle Cloud EPM, what this does. This combines all ESG metrics and tracks stakeholders to all be a part of the same goal. It ensures plans in place are achievable with respective workflows of how to, company-wide sustainability planning with long-term scalability, ESG stakeholders involvement with ease, consistently brings in external data with a controlled procedure, predictive case capabilities to validate your ESG targets, conduct what-if scenarios, and automate data analysis to quickly pivot when issues arise.
And Kendall, I'd like to just, for that what-if scenario there, I think that's a big important piece of the modeling in PBCS, is that you're able to, let's say, take different versions or different cuts of your forecast or your budget. So I've had clients maybe create an executive plan for a particular budget, but then also, let's say, collect the data from a bottom-up perspective. And so then marrying the two, or using predictive analytics to say, this is my machine learning version or my predictive version. And so having those what if scenarios, especially with ESG, where you're still kind of figuring out the landscape of the reporting, I think a lot of that could provide a lot of value because you're still trying to figure out the model. So if you use, let's say, some what if reporting to do that for you, then maybe that can speed your time to go live with the solution.
Awesome. Thanks, JayJay. So just some key takeaways here. With acquisition of sufficient data, ESG metrics can be integrated into the investment process when deciding what entities or bonds to purchase. 80% of companies plan to increase their investments in sustainability, and having a robust ESG technology in place, such as the Oracle EPM, you can decrease disconnect in reporting and aggregate data for streamlined accuracy. And the floor is open for any questions.
All right. This might be a question for JayJay or you, Kendal. What are some of the risks of collecting diversity data? So I think things like talking about hiring practices, maybe discrimination and things there.
Yeah, I think from some of that data is already was already being collected by HR and some of my strategic workforce initiatives, right? So as you, from a skills matrix and from a diversity matrix, just kind of collecting all of that data within the application. And so a lot of that data goes through the similar HR processes that all the other HR data goes through. And so we actually work together with HR to create some of those strategic initiatives from a workforce and from an employee diversity standpoint. And so it's not where people aren't working in a silo, right? You're working together as a group, so you ensuring that the HR practices that they're using, we're leveraging those same HR practices.
Hey, JayJay. Can you talk about maybe some of the downsides of ESG? I know it's a relatively new topic, but are you familiar with anything that has come up related to the downsides of ESG now, or potential things to be aware of, drawbacks, etc.?
Yeah, it's creating a whole set of different software that you have to create, and then you have to report on. And so it's just, I know my clients already struggle to reduce the time to close and to report. So this is just adding another piece to it. And so I guess that for me, that's a big drawback in terms of just the process itself, just another thing to report on.
Something else is the adoption of it, people seeing the need for adoption of an EPM for the ESG and the vast ability of ESG in a whole.
Sure. Well, thank you both to JayJay and Kendal. I can go ahead and announce the winners of our $5 Starbucks gift cards. We have Shane Gallier, Joseph Stoles, Juan Gardilia, Rachel Eckhorn, and Karen Payton are the winners of our Starbucks gift cards. I just placed a link to the CTP credit exam in the chat. I will be placing links for the next upcoming sessions too. AI and Treasury with Bob Stark from Kyriba. And then also we have maximizing efficiency and controls with in-house banking solution with Elire's Abdel Spawn. So links for the CTP credit exam are in the chat right now, as is the link for AI and Treasury. And in-house banking is now in there as well. So thank you all for joining this session. As a reminder, please follow us on our YouTube channel and engage with the hashtag ETE2024 on LinkedIn to be entered to win one of our drawings for additional prizes throughout the event. We'll see everyone back here at 1 p.m. Central Time after the lunch hour for our next two sessions. Thanks, JayJay. Thanks, Kendal.
Thanks, guys.
Thanks, everybody.